Welcome back, everybody. Harry here, known as Straight Chop, and oh my god, that was a huge dump. That was some scary times. I've never seen candles that big in my life. That was really a scary time. And there was no YouTube video because we were active in the Telegram. And it takes time for us to edit and to post, put timestamps, make a thumbnail. So you guys have to be in the Telegram. I gave a live update, and I was saying how I expected, how I was shocked that Bitcoin didn't end up bouncing in our area here, in this gray box area, which you can reference that video that was in the Telegram. And I said it shot straight past it down to our support at 30,000. Now, what's very interesting, guys, is guess what, where we based? Well, yeah, we based in my box, right? We can see we've tested it multiple times. We tested it here, we tested it here, and now the majority of the base is right middle in of the box. So that's nice to see that now my box is being respected. Yesterday it wasn't, which was pretty scary. So we have a support level here, right? And I do think that, after such an aggressive dump, we do have a little bit of a nice bounce here, right? Up to probably 42,000 in the minimum, right? And then if we do even get up, maybe even 45,000, and depends how aggressive. I mean, we saw Stokes get in crazy low numbers. We saw like daily stocks really started nosediving down to the lowest we've seen it in a while, ever since well before the pandemic and stuff, into that dump there. So I do expect a bounce from here, especially how this has been bought back up, and now we can see it, coming off our support levels here. You can see we have this resistance and this support. So I do think we have a nice little bounce up here. But the question is this the bottom? Well, there's a few things that will denote if this is the bottom. I definitely do think that this could be the bottom, but I don't know if Bitcoin is done, just gonna V shape itself out of there, right? Because what we can see here is we've essentially anyone who has risk management placed, all right? And this is how I see the market. So first of all, let's go see how I knew this was going to happen. Was calling this, guys. I was calling this, but I didn't expect it to happen in all one day. And I was using price action. There's a lot of this stuff going around Wyckoff, all of this, and I'll explain my opinion on Wyckoff in a minute and stuff like that. And yeah, so let's start off on the monthly time frame, right? So we're going to go here to the 1 month. And here was the signal, right? Is that we took out the last low of the previous monthly after closing bearish. Everyone thinks that this is bullish, right? Because we got bought up. No, guys. The monthly low was a wick was only very small. Price came up to this point here. So price from the monthly wick of how it was came up 14%, all right, or 8,000 points if you look at the left, right? If you look at this point there, it came up 8,000 points, all right, from where it was. The wick was like this big. It came up 8,000 points before having the sellers take control and sell it down another 10,000 points. So this is actually a bearish candle because the downside was bigger than the upside, right? And that's what people have to understand. Now, as soon as we took out this low here, the next level of support was at 33,000, and then the next level support was 29,000. And you can see we basically just about tapped in between leaving a tiny imbalance between these 2 points here. But you can see that this signal was taken off the monthly. So I did expect there to be some significant downside. And that's why I was saying in the videos, yeah, I still expect this to go down. I still expect this to go down. No matter what the bounce is, I still expect us to go down. But not like that, That was very shocking to see, that very harsh movement. Now, looking at the weekly, it's very clear to see now, guys, is that our weekly support is down here. Let's see if we can get a different chart, something clean like this, right? So our weekly support is down here at, you can see here, 32,000. We are not confirmed in a bear market until we close below that 32,000, right? That's the only confirmation we'll have that this is a bear market. These wicks accumulating above here, this tells me that this is purposely push the price down. There was a lot of sellers up here. And what you can see this, guys, this is resistance, resistance, resistance. And I'll explain. Okay, now let's get into Wyckoff accumulation now and distribution. So basically, you know, this is, you can see price bought up, price bought up, price bought up, price bought up. You know, there's something, you know, there was selling down to get this area here. There's a high liquidity area here, right? So let me explain how this works, all right? This is how, markets don't move from manipulation. No one manipulates the markets. Markets move because of an imbalance between buyers and sellers, and that's it, right? So we start off in the daily. Here's your Wyckoff accumulation and distribution pattern. So it's very complicated, you know, and I haven't done a lot of research into it. I've used to use it in Forex because it was a smart money concept, but to be honest, I don't like it, all right? First of all, you have to think to yourself, who can prove that this is an institutional method? Who out there can prove that you're trading an institutional method? No one can prove. And if it was that simple, right, and a well-known method that has been going on for, you know, so many years, that this method, Wyckoff method, has been going on, you think that the institutions will just use it again? It's well known. Everyone knows about Wyckoff, right? Just know everyone's talking about it because it played out. No one was talking about it before it played out. Am I right? You know, people who use, how can we use Wyckoff now once the move has happened? You have to think that to yourself. The move has happened. How is Wyckoff useful to us now? Right? Wyckoff should have been useful all the way up here, right? When the initiation of the move started, I knew from this point, we're going to head down to this support. As soon as we close below this support, I knew we're heading to the next support, just using price action. Because if you look here, we have clean candle here to the left, nothing stopping us, price filled that. It mirrored what it did to get up here. It mirrored the same way down. And that's based on price action, not Wyckoff, nothing. Why? Because we had a strong level of support here, all right? And you can see this, and I'm showing you the difference. Here's your strong level of support. Rejection, 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 rejection. Close below, that's a change of trend. This candle did what all the other candles could not do, which is close below this area. All right, which is coming in at, that area was 44,000. So this candle did what all of these candles could not to do. Look left, what you have left, minor support, minor support. Mostly clean candles coming down to fill what? A range, right? And once price breaks into the range, there's an 85% chance in Forex, and maybe now it's carrying over to Bitcoin, to fill that range. A 75% chance to break out of that range. So what did we have? We have price fill this area here, stumbled at that area here with all of these stuff. Let's start clearing some of this up. All right, stumbled at this area with some of this stuff. Then what did we do? Here's your range. All right, see the box. Okay, price broke into that range, and I said 75%, 85% chance to fill the range. Price filled to the bottom of the range before being bought back up. That's another way to look at it. So no matter what name you put to it, Wyckoff, blah, 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 head and shoulders, you know, and head and shoulders, here's head and shoulders, right? No matter what name you put to it, it's all price action looked at different ways, and Wyckoff is a very advanced level. Now, in terms of talking about liquidity, yeah, you can look at this liquidity. So this is an accumulation phase here. Price was accumulated. Here was a distribution. So what typically happens is that there are bigger orders down here. So let's say here there was 1 million buy orders, right? And they needed to fill those orders. The liquidity providers will put here 2 million short orders, right? To push the price down. So now the price is being pushed down. And let's say actually here there's a 5 million buy order, right? So the price gets pushed down. So now this position here, all right, to push the price up, okay, this is another thing that can happen, starts to come up here. Now the 5 million buy orders are bought. That's why you can see all of these wicks. And now the price starts to drive off. As soon as they reach back to break even, right, these short orders to push the price down are now loaded off. That's why you see these resistance here. After these prices are loaded off, price explodes, right? And then what do we see? We see price come down. So now they probably here take profits, bring the price back down, accumulate orders at the same zone. And once they bring price up, they deload their orders and they want to push it more. But now is something interesting, right? So now we see buyer and institutional exhaustion, right? Why do we see institutional exhaustion? Well, that's because if you look at this pattern, what you can look at it is you can look at this as basically not a lot of liquidity to push price in different directions, right? And there's no clear trend in this whole block. This was just a range. And what typically happens in a range, people's stop losses are all here. This is where all people's stop losses are, all right? So people thought once we go down here and we break above, a good place to put your stop loss is down here, okay? Or people start shorting and it becomes a bigger manipulation game so that they pop the price up here to stop the people out here before coming down, stopping these people out. But essentially, that starts to get very, very complicated, and I'm not the best versed in that type of concepts. To me, this is what I'm going to do. And to a lot of you, this will make a lot of sense. And this is basically what I think happened. Yes, it can be Wyckoff. Wyckoff is a well-known distribution pattern, but there's other ways to look at it. First of all, what did we have? We had obviously exhaustion, all right? And this is what I teach and show a lot of people, okay? Is this, look. When you're trading the trend, you want the upside moves to be bigger than the downside moves, right? So if we have a look at our daily trend, our upside move here, all right, from here to here was 24,000 points. Here you can see 24,000 points. Our downside move was at 10,000 points, stronger uptrend. Our upside move was, let me get that back up. Our upside move was, let me try that again. Our upside move here was 27,000 points and our downside move was 13,000 points, right? So now what are you guys seeing? You're seeing a pattern, right? You're seeing the downside, the upside is bigger than the downside. But when we start to get exhausted, so now our upside move was 16,000 points and our downside move was 10,000 points, right? Now our upside move was 8,000 points, right? And if you can count that, we're 4,000 points. So still continuing the bullish bias. But as soon as we reach that zone of this upside move of only 8,000 and this downside move of now 14,000, now we can start seeing, all right, there's something going on. But what actually happened was that we flipped structure here on the smaller time frames, which is a prerequisite, whatever that word is, to what was going to happen on the bigger scale. Now guess what? Upside movement smaller than the downside movement. So, and then also another signal, look at this, guys. RSI. Bring RSI up and we're going to go to 2017. All right. Here's 2017. Right, we're going to go to the top of 2017. What was happening in the top of 2017? We had, where was it? We had this triple bearish divergence here, right? Which you can see 1, 2, 3 drives from these points. You see these points were going up, these points were going down. And that was the top of, even let's see the weekly. That was the daily. So that was the top of 2017. Second point, we come to where we are today. Check this out, guys. These highs are going up, right? 1, 2, 3 highs, right? Look at this. 1, 2, 3 stabs of bearish divergence. We were to expect a move, guys. Come on. You know, you can see all momentum going to the downside. Then on top of that, what else do we have? Well, let me bring back my moving averages, right? And we could see one of the biggest trends that I used to show is, first of all, this daily 50 has been amazing, guys. I wanted up here, to be honest with you guys, once this daily 50 broke, I was like, okay. But I never took, because there were people around the space saying, no, this is not, this is nothing, this is nothing, this is nothing. But I was questioning it. And haven't gone through 5 cycles of Bitcoin, 4 cycles of Bitcoin. So I was keeping my mouth shut, but now this is just back tested it. Check this out, guys. Daily 50 always held strong, right? This you can consider the beginning, right? As soon as we got above and we hold above it, retesting it here, you know, but the minute we break below the daily 50, we always see a harsh move. But once we started getting above here, it ended up being a fake out, which I didn't like, and I thought was this is the reason. And once we closed back below, it just started to confuse me, and I never brought it up. But we can see that, you know, closing below, not holding this 50 was obviously quite a bad sign. And then when the weekly said that it closed above the 21, for some reason, my 21 moving average must be the real 21 moving average compared to all the famous people out there, because the weekly did close below and look what happened. It has to make you question, right? So we even almost came to test the 50. Have we ever tested the 50 in 2017? Nah. Only the 21. So this is interesting stuff, guys. Anyways, this is a longer video because I really want to go in depth of what I think. Now, listen, to cap off basically a little bit more about Wyckoff. So, yeah, Wyckoff, it could be good, but do you really think the institutionals are going to use a method that is well known by a lot of bigger players who have, they're not interested in you guys, the small, maybe some of you are whales, you never know, but they're interested in the big guys, and the big guys know all of these patterns, and all it is support and resistance at the end of the day. And here's your support. All right, here's your ranges. Okay, we're going to start marking out our ranges, and check this out. All right, there we go. Here's your range. Price broke below this range. Clean candle to the left. Filled. Price broke below this range. Clean candle to the left. Filled. Price reached support. Bounce. You know, it's just like Wyckoff, all of this. No, you take it range by range. But now let's cap up everything and also have a quick look at Ethereum here. So Ethereum on the other hand is still holding an uptrend, even on the daily. Can you believe that, guys? So amazing stuff from Mr. Ethereum. I'm very, very, very happy with Ethereum. And yeah, you know, it is treacherous, but to be honest, Ethereum, if it stays above 2000, as I've been saying, Ethereum looks good. But there is that chance that Bitcoin, you know, so to wrap everything up, yeah, I'm getting lost in my thoughts. You know, up or down is the question. Now, what do I think? I think that this could be very well a major low. But the only thing that worries me is we close the weekly like this, we make a top wick next week and have a what? A weekly wick fill, which is very possible, guys. Wick fills are very, very, very possible. What's the only thing gonna stop us? Well, what I do think is, I do think we do hang around this 35,000. I don't think we V-bottom out. I think we have this wick. We come out, we fill maybe half and then stop bouncing and go sideways. Similar to what? 2013. So if we go and look at 2013 and what happened there, we're looking a lot like that now. Wow, that's far. Check this out, guys. Check this out. So we came, we went up, we had this really sharp downfall, which we've just experienced, right? We got bought back up, went sideways for 1 to 3 weeks, basically. Then we came up to a new range, the previous range that price was in before. Range there for a couple of weeks before getting going. Now, I don't think it happens this fast because Bitcoin is more mature than it was in this area here. But I do think we have a little bit of a bounce like this, come back down and range, probably over summer, and then get going, right? And I think now all eyes should be on Bitcoin because everything is following Bitcoin. Even Ethereum and stuff like that, I don't want to sell, but that's why I just ended it saying Ethereum hasn't broken its daily, and as long as it's above 2000, I'm not worried. But that's what I'm basically going to leave it at, and that's what I'm leaning at towards, right? And that's what I think is going to happen. So to answer the question, up or down, right? This is the thing. Very hard to give a solid answer, but short term, I can give you an answer. Short term, I do think we have more upside. 42,000 is in the question and stuff like that. Maybe even higher if this bounce wants to get going. Then does it put in another lower high and fishes out a few wicks, shakes out a few more people? When people start to get bullish, right? Then come down, fish out a few wicks, go sideways, get really boring, and then continue up, and this continues the low. This all depends on us remaining a weekly candle above the 32,000, right? And yeah, that's basically it. With that being said, take care, guys. Trade sharp, and until next time, peace.